It's the capital of the happiest country in the world and consistently ranked one of the top 5 smart cities worldwide. But Helsinki, Finland, isn't resting on its laurels. The city aims to be carbon neutral by 2030. It's already reduced emissions by a third in the past 30 years, even though the population went up in that period.
It's a continuous quest to be sustainable, but basically we see sustainability in the city strategy as threefold. You must be, of course, economically sustainable. Then we want an environmentally sustainable city, and we have quite ambitious plans there so that we will meet our climate policy targets. And then, of course, sustainability also means social sustainability. We don't have polarized cities or neighborhoods that are too different from each other. So we must look very much at social stability, and we want to have a city where everybody can live a good life, whether you are a high income or a low income household.
With cities around the world looking to build back better, another challenge is how to invest in a post-pandemic recovery that doesn't leave people behind.
Equity looks like people being able to access safe services and opportunity in their cities. So when we talk about Singapore, when we think about where Singapore has really worked very hard to create equitable outcomes, it's in safe and affordable housing, being able to provide housing to all and education for all. And those are opportunities that have served the country very well.
The main benefits of investing in sustainable infrastructure is that it creates significant economic opportunity to the tune of $1 trillion in the Southeast Asia region in terms of revenue opportunities, in terms of cost reduction opportunities, etc. So there is significant business benefit. In addition, we'll also be living in a cleaner and greener planet, and hence the benefits will start to speak for themselves.
One key concern is affordability. But experts say sustainable infrastructure can be cheaper and more effective in the long run.
I would not say that sustainable infrastructure is significantly more expensive than traditional infrastructure projects that many of the developing countries have installed in their countries and have required for growth. Infrastructure projects in general are very positive for the economy. They create significant multipliers in the economy and promote more rapid economic growth. We're also living in a world which is not capital constrained. So if these developing countries put in place the right regulatory policy, the right carbon price, they will attract international capital which will be able to fund these projects.
There is a lot of capital out there, private capital, that is looking for investments, particularly in Asia, particularly in infrastructure. It is a matter of understanding how to attract that capital to the region. That capital is going to be deployed. There are plenty of investment opportunities. The point is, how do we make sure that that capital is attracted to Asia for sustainability investments? So because of that, I do think that is here to stay. If I take the example of the green bond market, ever since the World Bank issued the first ever world's green bond back in, it's been now 2008, so almost 15 years, that market has grown incredibly fast, but yet it is still a fraction of the financing that is needed. So just like we've seen the growth of the green bond market, we are positive the growth of the sustainability loan and sustainability bond market is going to follow the same path.
Experts say governments also need to play a key role in creating a suitable regulatory environment for sustainable infrastructure.
Infrastructure projects require significant investment over almost decades rather than years, and you need a stable regulatory policy to attract especially private investors to make investments in these projects. There's also a need for gradually increasing the price of carbon in the form of a carbon tax or creating an emissions trading scheme in each country to ensure that renewable energy achieves cost parity and over time becomes more competitive than energy from fossil fuels.
Actually, this isn't about financial costs alone. This is about creating value. When we look at the direct costs just of infrastructure impacts from climate change, not even other disasters, on infrastructure in lower and middle income, very vulnerable countries, about $18 billion a year, and that's extremely conservative, right? Then you look at larger cities, your Singapores, your Miami, your New York, these costs skyrocket, right? So actually, the cost of inaction is huge, and inaction is not an option. What we need to start to think about is creating the value that we need to build resilience, because if we don't, actually, these kinds of threats, climate change, pandemics, they become existential and they can totally disrupt cities' ways of life.